Guys, Trump is wearing a hat, not a red one that says "Make America Great Again," but a wool knit one, just like a dog. And might it say, "Make NFTs great again"? Look, like it or not, politics is becoming deeply intertwined with crypto. For reasons you might expect: regulation, policy, the things that politicians should be doing, and for some that you might not have expected: meme coin price action and a lot of money to be made off of memes. And a few major political stories dropped this week that we are going to break down for you today. Biden administration said it plans to veto legislation which allows banks to custody crypto. And then Trump went on stage and made several pro-crypto comments, bringing up a couple of major crypto founders with him as well. GM, welcome to Milk Road Radio, the easiest path to get smarter about crypto. I'm Jay Hamilton, joined by my co-host Kyle Reedhead, and we believe that on-chain is the next online. This is the opportunity. We're here to help you capitalize.
Jay, welcome back to the roll-up. I missed you the last 2 weeks, to be honest.
Thanks, bro. I'm glad you're honest and that you missed me. It'd be really shitty if you said you didn't.
Listen, we had some great other co-hosts that came in and stepped up, but it's always good to have you, Jay, here. Today, we got lots to talk about. ETF updates as per usual. Robinhood Wells notices. There's a lot going on in the policy and the boring stuff, but we've got a lot to talk about in that. We'll make it fun for you, don't worry. But in the tech side of things, the OP stack continues to grow with L3s. We're going to break down what's going on there. Coinbase is also kicking off Onchain Summer once again. And then, of course, what everyone wants to hear about is the markets. What's going on in the markets? We're going to cover that. We're going to help you think about what's going on in terms of market structure right now. It's all about patience. I'll give you that little TLDR. But lots to talk about today, so let's get into it.
Crypto will go up more than 100x in both users and value over the next decade. If you're listening to this right now, you're extremely early and have an incredible opportunity to capitalize. At Milk Road, our mission is to make you smarter about crypto. That's why we're doing today's podcast and why we send you a daily newsletter for free. But if you're ready to level up as an investor, then let me tell you about Milk Road Pro. We crafted this resource for investors who are already smart enough about crypto and are looking for more actionable insights on how to invest successfully in one of the fastest growing industries on earth. Every week, we break down the latest trends, dive into tokenomics of popular and up and coming tokens, and get into the nitty gritty of market analysis, all to help you invest smarter. Plus, we have a private Discord community for pro members. It's like your backstage pass to the Milk Road crew, exclusive insights, hot tips, and live AMAs with our team. Now, if you're looking to level up as an investor, then click the link in the show notes below and sign up to Pro today. Don't let this bull market opportunity slip through your fingers.
As we always do, let's start with the market watch, beginning with the major Bitcoin. Kai, what's going on in Bitcoin this past week?
Yeah, Bitcoin currently sitting at 62,174 as we are recording right now, up 1.6% on the day, up 6.67% on the week. But of course, still down a lot from not a lot, but still down from the highs we had previously. We pulled back about 22% or so in total in this dip that we've had for the last 50 or so days. So we're kind of just ranging, nothing too exciting in price action. I know people are starting to get a little bit bored and probably agitated. They're ready for prices to move again, but it's not happening yet.
Kai Willow is off. Feels like maybe because I took the time off, the market dumped. Actually, that's definitely not what happened. But ETF flows were going quite negative while I was off. What's going on with ETF flows?
Yeah, I mean, kind of expected. People are like, oh, they're not a success. They're sort of failing because we had like a week or two of red days. But it's like, guys, we had the most ridiculous start to ETF launch ever. Just blew apart like expectations. And so pullbacks like this are normal. Expectations goes back to what Carly and I talked about last week, which was all about people need to learn to manage expectations. So yeah, of course we were going to get a pullback. Of course we were going to get some outflows. It can't just go up forever. It looks like that's sort of finished at this point. We had almost a week or two of straight outflows. And then since basically May, we've been mostly green. So that's pretty good. We like to see that. Was May 9th actually just zero, or just it wasn't counted yet? I guess that's today as we're recording.
Not counted yet.
I was like, no way we had exactly zero inflows, outflows. So yeah, it's starting to come back. But again, we'll talk more about market structure in a second.
The other thing that caught our eye this week was obviously Hong Kong finally launched their spot Bitcoin ETF. And in the first week of trading, which was last week, we don't have up-to-date numbers on this, but it was over 300 million in inflows in the first week of trading. Pretty solid start for 1 week in Hong Kong.
Absolutely. It's actually very impressive and also beat expectations here. Now, look, it's way smaller than the US. Although in that week, it actually had way more inflows than the US. I actually think the US was negative 250 million, was it, for that week? And Hong Kong was positive 307 million. So it all helps. It's all great. And it's not just Hong Kong. We've got, so two things here. One, we have an asset manager, Hightower, which disclosed this week that they have bought 68 million worth of those spot Bitcoin ETFs. So it's not just retail buying this stuff and then trying to dump. It's bigger institutions buying. But the other big thing is, so we've got the US ETFs, you've got the Hong Kong ones now, which is great. Well, now South Korea has just announced that they are going to be allowing spot Bitcoin ETFs, or likely, I think they're still voting on it, but that'll come in June. So we're like a month away from having another fairly large nation state that's going to have Bitcoin spot ETFs, which again, just allows for more inflows and more legitimization of this asset inside of their country. So this is all amazing, amazing stuff. And again, takes time for it to unfold, but it's all bullish.
Gradually and then suddenly. Okay, let's go to Ethereum. What's going on in ETH this past week, Kai?
Ethereum just floating around 3,000. It's basically exactly that as we're recording right now. So nothing, again, too exciting. Up 1% of the day, up just 1.2% of the week. It continues to just range just like Bitcoin, but Bitcoin still continues to lead and be the dominant asset. And so Bitcoin dominance continues to rise, though I believe that is going to change very soon, which again, we will talk about at the later part of this market watch section.
What else we got happening with Ethereum? There's lots of talk about, obviously, the upcoming deadline around the ETH ETFs. Kind of not much news happening there recently, but
it's kind of a no news thing on the spot ETF. We haven't heard much, unfortunately. What one interesting thing did happen over the last week, which was Grayscale, who had their a filing, it's called a 19B4 filing for the futures ETF, the Ethereum futures ETF. They actually pulled that, so it's no longer exists, which is kind of odd. Grayscale did this with Bitcoin. They had it, and this was when they took the SEC to court and said, hey, you should be able to move our trust into an ETF, a spot ETF, because you've already approved our futures ETF. It makes no sense. That was their whole case. And so the assumption was they were going to do the same thing with Ethereum, get the futures ETF approved and then go to court and push the spot Ethereum one to get approved. And now they've pulled that back. And the reason they said is basically they want to focus all their resources on the spot ETF, which is either some people are like, well, this is bullish. It means they probably think it's going to get approved, so they didn't need the futures one. Some people are like, you know what? It might just be a bit of a waste for the futures one. It doesn't make them a lot of money anyway. But really, they spent a lot of money in court to push that forward for Bitcoin. And then who came in and benefited the most from it? BlackRock. And so some people are saying, well, you know what? Maybe it just doesn't make sense for them to get this futures ETF approved, go to court, spend all that money, all those resources, and then BlackRock just comes in and takes all the fees anyway. I don't really know if this is good news or bad news, but just an interesting development in the story. I don't know if this thing's going to get approved in May or not. It seems like it's not, but who knows?
Anybody who does know, please call the milkman. He'd like to know if he could. Let's go to Solana. What's going on in Solana this week?
Yeah, Solana sitting at $146 as we record right now, up 3% on the day, 9% on the week. Obviously, it's the one that's pulled back the most out of all these. But every time we get a little bit of hope of market's going to go up, Solana just fires out of the gates. Now, whenever we realize, okay, actually, we're not going to go and take the next leg up in prices, it comes right back down. It's obviously more volatile than something like Bitcoin or ETH. But whenever prices do move to the upside, Solana is going to, by far, be the fastest horse in the race. So allocate accordingly is what I would say.
You're not the only one that thinks that Solana is going to be the fastest horse in the race. And this isn't financial advice for me, but this is coming from somebody who is certified to give financial advice. That's Franklin Templeton, one of the largest asset managers in the world, over 1.5 trillion assets under management. They released a report talking about Solana's adoption and a really bullish case for Solana. In this, they talked about how they were really impressed with Solana, how Solana captured so much of the Q4 23 rise of crypto as a result of all their native airdrops that happened at that time. They remarked on the resilience of the network, coming from the collapse of FTX when it was below $9, and it stuck around. And that means a lot. That resilience shows they managed to keep their adoption numbers strong throughout. They also talked about Solana's low fees and scalability, which will enable these use cases that could take them into so many new markets, talking about use cases around payments and decentralized infrastructure or DePIN and NFTs. So they really took a strong stance on the bullish case for Solana. I'll read you a quote from it, and then Kai, you can jump in and let me know if you have any thoughts. They said, crypto enthusiasts are wondering what might be the next big thing in crypto. While we don't know the precise answer, we'd argue there is a strong chance it happens on Solana.
I mean, I completely agree. You know, the thing with Solana that I would say right now that's so interesting is in terms of like institutional mind share, not many assets in crypto get that, right? Or not much technology in crypto gets that. A lot of it is just kind of crap, especially the like top 10, top 20, top 30. There's Bitcoin, which obviously has institutional mind share at this point, and especially with ETFs. Ethereum has had it as well. Institutions are building on it. You know, BlackRock has the Biddle Fund, et cetera. They're now trying to get ETFs approved. It is a topic of conversation in the institutional world. Nothing else on the list gets that. I mean, XRP, no one talks about it. No one cares. Cardano, no one gives a shit about it. BNB, no one cares, and so on and so forth. But there is one that's starting to get whispers, and it's Solana. And so like, if you are still stuck on Ethereum and the L2 ecosystem, which by the way is great, and I'm obviously very bullish on that, but if you have not moved over to Solana and like played around with it or investing in it and trying to understand it and wrap your head around like its differentiators, like you really need to. It's so obvious and has been so obvious for more than a year. That's why we've written more pro reports on Solana than anything else over the last year and a half or so. It's been our biggest call. It is, and it's still the most obvious trade because it doesn't have the institutional adoption yet, but it's getting it. People are talking about it. And then like Stripe just announced that they're building on top of it. Visa is building on top of it. Like, it's so obvious that this is the next big major asset. You have Bitcoin, you have ETH, you will have Solana. These are going to be the three big ones without a doubt. And there will be more in the future. But to me, it's just very, very obvious that this is the next big thing. And it's going to bring a bunch of new use cases that just aren't really possible elsewhere. So if you're not paying attention, this is probably my 100th, 200th cry about pay attention. Solana is here to stay without a doubt.
I just recorded yesterday a great show, which is coming out next Monday with Pomp and Jacqueline Melinek. They started a new company called Token Relations Together. I'm not going to tell you what the company is. You can listen to next week's show to check that out. But I asked Pomp directly if he's a BTC Maxi and what his thoughts were on other tokens. And he wouldn't mention any other tokens on the show, which was hilarious.
Oh.
So clearly a BTC. And he said flat out that he is a BTC Maxi. But the other thing he said was that he admitted, he's like, look, like I can be a BTC Maxi and still believe in all of this other tech. He's like, which I do. He's like, the only reason I'm a BTC Maxi is because it's the one that has achieved so much that I have the most conviction in it so far. And he's like, it's also the one that when I go on news shows, that's what they want to talk about and what they want to hear about. As you said, these institutions and these mainstream they're not talking about Solana yet. So it was funny. Really tried to get him to mention another token. He wouldn't do it. But I think he clearly indicated same sentiment that you have, that there's the belief that this other stuff is going to be very successful. Let's go to some macro conversation, Kai, because macro has such a big impact on the space. What are you seeing from a macro perspective right now?
Yeah, it's a confusing world out there. I think for many, there's obviously the inflation continues to sort of lag and not go as low as people are wanting to, though it is down a lot from where it was, a year ago. And so there's a lot of mixed signals. There's that inflation scare. So people are like, well, rates, can't go lower if inflation's that high. But then just this past week, we had payrolls missed. So basically the amount that people are getting paid, and unemployment was much higher, which these are also signals to say, hey, rates need to go lower. Right? The economy is not doing as well. So a lot of mixed signals here. The key thing is this: we are in the season where bad news equals good news, which is interesting because and what I mean by that, if you don't really understand, I have a tweet up here that I wrote, which is bad news for the economy, which means people literally losing jobs and not getting paid enough money, means really good things for our crypto bags and for risk assets in general, whether that be tech stocks and other things. So if the economy is bad, that is good news because it means the Fed is going to intervene. And they're either going to lower rates or they're going to print money or whatever. And whenever they do that, our assets go up. So bad news equals good news. Markets don't always work that way in the short term. Bad news generally kind of scares the market. So sometimes people sell off. But then once people realize what's going on, all of a sudden then markets do well from it. So we actually want unemployment to go higher because ultimately that means that they're going to eventually need to lower interest rates. So anyway, it's a weird scenario and something weird for people to wrap their heads around. It is playing out the way that we want it to, in my opinion. Like, it's just a typical cycle. This is all very normal, but if you haven't been in a cycle, it's hard to wrap your head around. So for me, where I think we're at in the cycle is we just need to be a bit patient right here as macro kind of gets figured out. Rates are going to go lower. They have to. I've talked about this a bunch, so I won't even get into those details. The macro side of things in terms of like where we're at in terms of the economy, it's coming around. So it's going to get worse for a little bit, and then eventually it'll start to get better. I talk about this a lot in a coming pro report where we dive really deep into macro. But basically, the TLDR is this is a typical macro cycle. I think right now we're in this stage where I actually don't see a reason for us to go up in terms of price for the next little bit because there's just no catalyst. No catalyst from crypto is going to make our markets go up more. It doesn't matter what airdrop's coming or what new protocol comes. Like, it's not big enough. What matters right now is macro. We need liquidity. And the thing to understand is liquidity is coming. In China, they have printed more than added $1 trillion in assets to their balance sheet over the last year. So like liquidity is coming, just not in the US yet. We need unemployment to go a little bit higher. We need things to get a little bit worse in the US in order for that to come, but it's coming. And in fact, if you really dive into the details, the US is printing money. They're just doing it in kind of a backdoor way through like the repos and through like all these different ways I'm not going to get into because it's very like complicated and complex. But they are doing things in the background that is actually them printing money. It's just not showing up in the way that we typically look at it. So all that to say, China's already printing. Japan's got a shit show going on, so they're going to need to print. Europe has some very, very strict guidelines that they have to have in terms of like their renewable energy and stuff. And the only way they can achieve those is by printing. So like China, Japan, Europe is all going to print money this year. The US, it will come, especially with the election coming. We're going to talk a lot about politics here. We're just in this like phase where we know it's all coming, but it takes a bit for it to play out. And so this is always the confusing part. And the real issue with it is that people are very impatient. And so when we reach this point, which by the way is the best time, in my opinion, to be accumulating because we know where it's going to go. It's just we don't know, will it be tomorrow? Will it be a couple weeks? Will it be a couple months? In my opinion, it's probably going to be a little bit. I could be wrong, but I think we are going to be in this kind of range that I've been saying for the last how long? For months. It could be till the end of summer. Think about that for a second. Everyone's like, why is retail not here? Why are we not going up? Why are we still in a dip? It's probably going to be months, in my opinion. And so Q3, maybe it's actually Q4, which, you know, is when the elections come in and all this other stuff. So I think it's going to be a bit, which I just think it's a good time to be accumulating. And then the fireworks will all start soon. And it's all good. It's just going to take a bit. And so we got to be patient. That's all.
Patience, man. That's a tough one. And that's anti-human nature. Human nature is not patient. Human nature is not taking it one step at a time. It's immediate, faster return. Give me that dopamine.
It's because everyone has been told we're in a bull market. And so people go back to 2021 of like bull market's just crazy. It just goes up and up and up. And it's like, no, bull market takes time. Actually, if you remember 2020, we went up early. Then COVID hit and things got, I mean, in this instance, things got a little bit crazy, but it was months and months before we actually passed. Like it wasn't until the end of 2020 till we beat all-time highs and then just skyrocketed from there. But we had that first phase of the bull market where it was like end of 2019 where things went crazy. And then it did nothing for months and months and months and months. And then Michael Saylor finally started buying. It still took months. Then we passed all-time high and it was Q4 where things went nuts. And so we're kind of at that same stage, right? Like end of 2023, early 2024, things have been great. We maybe went a little bit over our skis here with the ETFs being approved. I think it's going to be months for the markets to figure itself out again. And then probably the end of the year, we start to go off kind of like last cycle. And honestly, if you look at all the cycles, we've done this every time. Again, if you're not pro, go pro, because I have a full like 10-page report breaking all this down in terms of macro, but also in terms of like the cycle trends. To me, it seems like we're actually just very much on track. So we just got to be patient and let it play out. And don't get caught up in this like accelerated cycle bullshit. This is just narratives change when price goes. Price went up fast because we got an ETF approved. Obviously, that was going to happen. But then people go, oh, now the cycle's all different. It's like, nah, just chill out. That was just one little narrative. It's now died down. That's normal. We got to wait for macro and liquidity to come back in, but it's coming.
One of my favorite tweets of the week that lines up perfectly what you're saying, Kai, was Purple Pill, who said, so if we all quit our jobs, the coins will go higher.
Oh, that's so good. I love it. Bad news is good news. Now, if we all, I don't know, there's not enough crypto
We all,
people for it to make
we
it.
is the key word here. We.
If we all quit
Ironically,
ourselves, it's so
no,
good.
we need everyone else to get fired from their jobs and
Right.
to lose their jobs,
Yeah.
which makes me sound like a total asshole to say that. So I hope that doesn't happen. But there is a lot of truth in the fact that if people lose jobs, coins go higher, risk assets go on. Okay. Anything else to add on the market watch before we jump into some politics in the top stories of the week?
Yeah, politics. Let's go to it. Let's do it.
Let's go to politics. We don't talk enough about politics. It's election year. We're going to talk a lot about politics, I bet, this year. I shouldn't say we're talking about politics. We're going to talk about the impact on crypto. And two things happened this week. First with Biden, and then second with Trump. Let's talk about Biden first. So first, the Biden administration came out and they said that they have plans to veto legislation, which was actually currently being voted on. Like, they said they were going to veto this legislation that got voted on yesterday. We'll tell you what happened with the vote in a second. And this legislation is meant to allow banks to custody crypto. And so Biden administration said, yeah, we're going to veto this. The reason they said they were going to do that is because they believe that custodying crypto would disrupt the SEC's work to protect investors. I can't even wrap my head around that line, but that's what the Biden administration said.
Wouldn't that
That's
help?
what exactly like what?
I don't know.
Like banks custodying crypto is like, that's what they want. They want banks to custody our assets because they believe that banks are smarter than anyways, whatever. What this would obviously mean is, it would continue to slow down adoption in the US. It is another step of the Biden administration showing that, man, I hate to say it, but like they're on a crusade against crypto and they continue down that path. And it doesn't appear to be slowing down.
Well, thankfully, the US politics doesn't work like that. And Biden can't just come in and veto, because although he put a letter out saying that they would like to do that, it was voted on. And there was 21, I don't know, whatever these votes are, that were to the yes. And basically they all voted. I think this is Congress. I'm not exactly sure. I'm Canadian, so I don't know everything going on in the US politics. But basically what happened, this is the Coinbase lawyer that tweeted this out. Basically what happened is they voted anyway, and they all voted against what Biden and the administration said in that letter. And so this legislation did not actually go through this way. And what Biden wanted is not going to happen. So this is really, really good news that the Democrats came in and they voted against what the boss, Biden wanted them to do. Mm-hmm. So this is politics working the way it should, right? These are obviously people that were all voted in for their jurisdictions, and they voted to say, hey, we don't think that what Biden said is correct. And, we want to be on the right side of the history books. And so they voted against it. And I absolutely love to see that.
Just to be clear here, they voted in favor of the legislation. So the legislation is going forward, which will allow banks to custody crypto. Right. Even though Biden basically threatened and said, yo, I'm your boss. I'm the head of the Democrats. I'm going to veto this regardless of what you guys vote. Right. So it was kind of it's power, right? Like he's trying to control and use his power to say, hey, this is what I'm going to do regardless of what you guys do. And these guys said, you know what, middle finger up in the air. We're free thinkers. We believe in the future of crypto. The milkman salutes you. Well, that's not all that happened in the political world. Also, Trump got on stage and just had a time talking about crypto. He had some great lines at an NFT event where he said, I'm good with crypto. If you're for crypto, you better vote for Trump. He said, I made NFTs hot again, which is just a great line. And then somebody asked him if he knew about Bowden, the meme coin. And Trump said, yeah, that sounds like a bad investment. It's just incredible to think about. These guys are talking about meme coins now. And so you can just imagine what's going to happen with meme coins in the coming. God. And we had some great takes on this. We're going to talk about later in the show. And then he had Ryan Selkis, the founder of Masari, up on stage to talk about his support for Trump, basically, and his belief that Trump is going to be pro-crypto and the best way to go. Also on stage, I've got a screenshot of a video up on the screen here. You can see in the background, Halo Bellick. I can never say his name properly. He's one of the co-founders of Polygon. So they were on stage with Trump talking about how they believe Trump and his administration is going to be the best solution or the best forward movement for crypto.
And for context, Ryan Selkis is the founder of Masari, which is a really big crypto analytics platform in the space. What's interesting here is that, so when Trump was on stage, he was asked also about Biden. He was like, guys, Biden doesn't know anything about crypto and he doesn't like crypto, basically is what he said. So Trump taking a pro crypto stance here. I wonder how big the crypto, world is in terms of politics in the US. There are a lot of people in the US that hold crypto. So I think they definitely have a say. I don't know if it's necessarily the biggest say, but Trump obviously sees it as an important, like, I don't know that Trump really loves crypto. I think he's just trying to get the votes, but who knows? I could see him understanding crypto more than Biden, mainly just because he's obviously like a business entrepreneurial type. So like, I think he gets it a bit more. I could see, and he cares more about, I think, freedom than necessarily that Biden does. The cool thing I think was Ryan Selkis has been very, very vocal about politics in crypto for years now. And he has made it his main goal to figure this out and to really get into DC and try to push strong regulation. And so he's supposed to be just a founder for a crypto company, and he has instead decided to just like go all in on politics. And so it's good to, whether you agree with, Trump or not, I don't really care. It's good to see him take a side for someone that is actually supporting crypto. And who knows what Trump will do if he does win. But I believe he will actually do something good for crypto. At least that's what he's saying. And I think if Ryan is there up front and supporting this and saying, hey, this guy's going to do good things for crypto, it makes sense. I mean, obviously Trump is playing around in crypto and he's doing things. So like, he obviously has some interest in it. Biden has only been a dick to the space. So I think, if you're pro crypto, you've got to kind of vote on someone that's going to at least support our industry. And there's others, not just Trump, that's going to support the industry. Obviously, you got to think about that. But hopefully we have a say. Hopefully crypto people actually have a big say at the U.S. election.
Yeah. So what I saw was there was a poll that came out this week that said 20% of voters in swing states care about crypto from a political standpoint. So I don't know, like 20% is not a massive number. Now this is obviously in swing states, so that's where it matters. But it's also, to be honest, it's higher than I expected it to be.
It is. I mean, to be honest though, it doesn't really matter. Sure, it might help things move a little bit faster in the US. But look, if Biden wins and he continues to do what he's doing, it'll just move out of, it already is moving out of the US, and crypto will flourish and it will continue. And it doesn't actually matter. Obviously, they can try to slow things down, but they're never going to stop this thing. So I wouldn't be too concerned either way. It just would be nice if it wasn't, if we actually had some support here, because I mean, crypto is doing some amazing things for the US, especially for the dollar, if you understand stablecoins. So it's a bit wild that they can't wrap their heads around that, but is what it is. Either way, it's all good.
I just want to remind people that Trump is not necessarily pro crypto. He is pro himself and going to do and say whatever he needs to say to get what he wants. And a great reminder of that came from Franklin is bored, who's a favorite on Twitter. And he posted a screenshot of a tweet from Trump from when he was in the Oval Office last back in 2019. And he says, Trump says, I'm not a fan of Bitcoin or other cryptocurrencies, which are not money and whose value is highly volatile and based on thin air. Unregulated crypto assets can facilitate unlawful behavior, including drug trade and other illegal activity. So Trump is not a crypto maxi. He's not in it for the principles or the belief in decentralization like the rest of us. He's in it for himself.
I mean, so to take the other side of this, and I'm not supporting Trump by any means, but you can do this with a lot of people in crypto who in 2019 did not like crypto because there was nothing in crypto at that point. 2019 was before we even had DeFi. And so like nothing was big back then. And crypto literally was just a piece of shit. And so we've come a long way in the last 5 years. And so there are many, many high profile people that said that crypto was crap and now are building in crypto or are big holders of crypto, et cetera, et cetera. So to take someone's tweet from 5 years ago, it's like, I don't know. Either way, I agree. Trump cares about himself and only himself. But I think to do it based off old tweets is probably not the right way to do it.
Hey man, that's what we do on the show. We take opportunity to slam people for their mistakes, man. Come on. That's the fun. I love doing that. Yeah. No, you make a good point. Okay, let's go to the next story. Keeping with the political theme, the SEC has issued another Wells notice. Feels like a badge of honor at this point if you're operating in the US and you're a large institution. Coinbase, Consensus, Uniswap have all gotten Wells notices. And now it is Robinhood that has received a Wells notice from the SEC. For those who don't know, just a reminder, a Wells notice is basically the SEC saying, hey, we've got eyes on you, and we are, usually it comes before a lawsuit, usually followed up with a lawsuit from the SEC. And so, look, this isn't really a surprise, to be honest. Like, Robinhood is a large fintech institution, and we've talked a lot about how fintech and crypto are going to blend. We see it with most major fintechs, and obviously the SEC has a hard-on for all major crypto institutions in the US because for whatever reason, they continue to believe that enforcement is the best way to regulate and lawsuits are the best way to do it. So yeah, here we go again. I don't know. I kind of feels like not anything that anybody needs to pay attention to.
No, I mean, it's more just like an annoyance. I think they're going after all of our biggest players: Coinbase, Consensus, Uniswap, Kraken, PayPal, Robinhood. So like, at least it's ones that have the money and the backing to actually fight this. And the good news is like, we win all these cases. So like, go for it, SEC. Take us to court. You already got your ass kicked by our worst one, which was XRP and Ripple. They beat your ass. What do you think you're going to do against Coinbase and Kraken? Like, you're not winning this stuff. So like, keep doing it. It's actually better because the more lawyers and the more teams we get in to fight the SEC, one, like the SEC doesn't have unlimited resources. So I don't know how they're going to handle all these court cases. So like, if anything, they're kind of biting off more than they can chew. And two, they're just going to keep piling up losses. So like, it's all good. I actually don't, as much as this sucks, and the teams that have to deal with this now, it really sucks. It's a lot of money and time and resources and stuff. It is really annoying. And I know it slows down the innovation that they want to do, but ultimately, if they're not going to give us regulation, we got to do it through the court system. And so like, sure, take on our best ones. That's probably our best chance of winning, you know? So I don't know. That's the optimistic take, I guess.
We also saw news out of a friend of ours over at Exodus, a wallet that we've been longtime supporters of. They also are on the SEC's hit list this week. What happened here, Kai?
Yeah, so the Exodus has this like very interesting like way that they had launched a token. It's not even really a token, but basically they put their shares on chain is what they did. And these shares were supposed to go on the New York Stock Exchange, but it's tokenized. So there was a way that people could buy these shares on chain like before they've gone on, which was really cool. And I love the way they did it. It was all super legitimate and, you know, regulated, et cetera. And then they were supposed to launch on the New York Stock Exchange, and who blocked them the day of? Obviously the SEC. And so now they can't do this. This was supposed to be actually a pretty cool moment for crypto. And unfortunately, Exodus getting blocked. SEC just continues to be a pain in the ass.
All right, let's go from politics to some good news. I don't know. Let's see what you think, Kai, if you think this is good news or not. FTX has proposed a plan to pay back their creditors. Their creditors obviously mostly consist of 98% of their creditors are over $50,000, under $50,000 in credit that they are owed. And so it's mostly American public who put their money in FTX, and yeah, they should definitely get their money back, right? And it was $8 billion that was lost, over $8 billion. FTX has made a plan. They're saying, hey, we're going to pay you all back. We're actually going to pay you 118%. So you're going to get your money back plus 18%. And this news picked up and a lot of people said, hey, great. Everybody's getting a full recovery. That was kind of the tagline that we saw across Bloomberg and across a lot of major news channels. And then a lot of people said, hey, whoa, wait a second. This is not a full recovery when you actually look at the numbers, because what people are getting is they're getting paid back in US dollar of what the value of their tokens or their investment in FTX was on the day that FTX crashed, which was November 2022. And at that time, let's say you own Bitcoin. Well, Bitcoin was only worth 20,000 then. So if you're getting 20,000, 118% of that. Today, Bitcoin's worth 60,000. So you're not getting the payout that you deserve if you still held that Bitcoin. Solana's up 5x since then. Ethereum's up 2x since then. So Kai, what do you think? Good news? Bad news?
So I went through this with Celsius. I had some assets on Celsius, and they've already done their plan and gave us back. And so it was the same thing. They had to give back the amounts based off of the US dollar amount, not what it's at today. It sucks. Obviously, it really sucks for people. Like if you would have held that through the bear market, you know, it would have 3x'd, et cetera. And so a lot of people are going to lose money. They say it's 118%. It's not. Again, I always like to take the other side of it and just say like expectations. So look, you fucked up if you went and put assets on FTX and it collapsed. I say that with Celsius. Like I thought it was a loss. So my expectation was, hey, I messed up. I was not responsible. And I put my assets on a centralized exchange that I did not know about. And I did it because I wanted some extra yield. And that was dumb of me. And look, there are many people who just didn't even know that. I'm in this space and I knew that. And I still did it, right? It wasn't all my assets. So I was fine. But I know many people did. So I feel really, really bad. But ultimately, we need to take responsibility for our own money. That's why we're here in the crypto space as is. And so look, your expectation should have been like, hey, I screwed up and I should get nothing back. But thankfully, something's coming back. Like when I got some back from Celsius, it was not a lot. But I was like, hey, this is great. It's better than nothing. It's all about expectations, your perspective. It sucks. I know it's we had Carly on last week and she explained the fraud that's going on, not just from Sam and FTX, but from the lawyers as well. So like, look, none of this is good news by any means. So that's my answer. But also like, be happy you got something back because there was a really good chance you were going to get zero. And then one other point, and I know people are not going to like this one, is you probably weren't going to hold those assets to the bear market anyway.
That's what I'm thinking.
So
that's
like,
exactly what I was going to say.
Yeah, like most people sold at the bottom. And so all I'm saying is like, hey, they kind of forced you to hold it. Now maybe you would have bought back in, but most people were buying back in at 60K, 70K anyway. So like, I don't know. And I know I'm the asshole for saying that, but most people weren't going to hold that anyway. So like, just be happy you got something.
Like here's
That's
what
not
I
to
wish.
say what they did was okay, or that, obviously I hate everything that happened. It sucks. Again, I'm an optimist. You got to just take your punches,
No, keep bringing the controversy. I like what you're bringing today, Kai. I'm feeling the vibe. Here's what I think. I hope the history books say FTX, everyone got their money back. That's it. That's all it should say. It should say nothing else. Like that's it. That's like all the lines should say in history, and everything else should be forgotten and put behind us because nobody should have to talk about it ever again. Let's move on to next. One of the leaders in scaling Ethereum is Optimism. They have been since the beginning. Just look what they've done with Base. Base already over 5 billion TVL as a result of building on the OP stack. And they've done that in less than a year. And they're not the only ones. And now Optimism came out with some big news this week saying that they're going to welcome L3s to the super chain. So starting now, L3s can build on top of the super chain or on top of the OP stack. And as part of that, you need to share revenue with the OP collective. And you're going to get a lot of benefits for doing that. You're going to get access to the entire super chain, which we've talked a lot about. We've had some of the super chain, other L2s like Mode on the podcast recently. And then, of course, you get access to Optimism's retroactive funding, their airdrops, their growth campaigns, their expertise, their network, and so much more. I think this is really great to see, Kai. What are your takes?
Yeah, look, a lot of people are very confused about the L3s and what this means. And they're like, oh, well, is there going to be L4s and L5s and L6s? And it's like, that's not how it works. There might actually be L4s, but not in the way that most people think that they're going to be. L3s are good for a few reasons. But before I get into that, just think of an L3 as just an app. It's basically just an app that is existing on top of an L2, right? And all it is like apps also need to facilitate transactions, or basically they need to do something with data. They need a database. And if they want that database on chain, it's better for them to just do it as an L3 than it is to make their own L1, or technically they could make it an L2, but there's just some scalability issues with that. It's better to have it as an L3 because the scalability stuff is taken care of by the super chain, by Optimism. And then on L3, you don't have to worry about any of the scalability stuff. You're just pure execution and like making your app work. It's just some of the things of your app might want to be on chain. And so it's better to do it as an L3. Remember, everything is going to be a chain, right? And so we think of these as like, oh, it's another token and it's another like competing thing. It's not fragmented. It's all one, and it's all just part of this super chain. It's just some of the things on the app need to be on chain too. And so they're calling it an L3. They didn't have to call it that, because it starts to get confusing, I think. L3s are not just like this general purpose thing like Optimism. And then we'll have an L4 that's a general purpose thing. And like, it's just going to keep happening. That's not it. An L3 is just an app that needs some things on chain. And the reason you would have an L3 instead of just doing that thing on the L2 is, one, it's a little bit more scalable. But two, you have customizations. So there are things that you can't customize on Optimism itself, but you can do as an L3. Whether that's like get rid of fees in general completely, and then you just cover the fees for your apps. Or I don't know, maybe you want people to pay in a different type of token, or I don't know, you want to take a cut from fees. Like you want to do certain things as a business, you have more freedom to do it that way. And so you could think of it as like, a chain as a service type thing is what an L3 is. But basically they're just apps. Now, at some point, there might be an L4, like other chains existing on L3s, but there is no additional scalability improvements from that. The only way that would happen is like, let's say a game launches as an L3 and it becomes an ecosystem where other games want to build on top of that game, and it wants to stay into its ecosystem for certain benefits, they might build a chain that directly links into that L3. And technically you could call that an L4, but it's not for like additional scalability or like any of these reasons people think. It's just to have them all connect in for functionality purposes. That's all. So there's no really reason to have an L4 unless you want to be part of that ecosystem, which like you could think Nintendo might build an L3 and then have its games kind of connect into that. So anyway, hopefully that sort of clears it up there, but we need that tech to be improved and to actually like function and be really, really good and useful. And then obviously we need teams to help those apps that want to build on top. That's where the super chain comes in. That's why this is big news that OP is now kind of allowing L3s to come through. Base has talked a bunch about this, where they're going to have a bunch of L3s. I mean, Degen has already won the meme coin chain. Bit ridiculous. That's the first one we get. But hey, that's what's going to happen. Rari chain is also one in terms of NFTs. And again, they're doing this because there's more customizations that they can put. I think that we're going to see a ton of L3s. Maybe we need to get rid of the word L3s and just apps, we could call it. Might make sense to more people this way. On-chain apps, you know, dApps, that's all this shit is. And so the super chain basically is now trying to build more infrastructure and more assistance for apps to come and build on the super chain. So whether that be on top of Mode, on top of Optimism, on top of Base, etc. So again, these are just the steps we need to take to get all the apps we want and to reach that scalability. So continue to watch what Superchain is doing. I think they are one of the best teams and one of the best like ecosystems that are in the space in terms of like scalable opportunities here. I think what Optimism is doing, what Arbitrum is doing, although a lot of theirs is kind of like hidden and people aren't really talking about it too much, but I think they're doing a ton. And then you have, I mean, Solana obviously is the other one that's got a ton of teams and apps and building on top of, but these are the big ecosystems I think people need to be paying attention to.
Thanks for doing such a great job of explaining that for everybody.
Maybe we'll get an episode that we get someone who's a little bit more technical to come in and explain the nuances of it. We can't get to that in a roll up here, but you're welcome.
Yeah, you know what? You tell us. If you're listening to this, today's poll question is, do you want to learn more about L3s? Bonus if you also tell us if you think that we should stop calling them L3s, as Kai said, and just call them apps. Comment on YouTube, wherever you're listening, or on Twitter, or answer the poll question on Spotify. That would be sweet. And if you guys want to learn more, we will bring somebody on the show to break it down for you. Okay, let's go to the next story. Sticking within the Optimism and Superchain ecosystem, Coinbase has announced that they're launching Onchain Summer II. It's coming back. Onchain Summer was one of the biggest campaigns that happened in crypto last summer and caught a lot of attention and also really pushed the on-chain brand to the masses, which was really great to see. And it's going to start in June, starting June 3rd with an online hackathon with over $2 million in grants available. So if you're a builder, check out Onchain Summer because there's going to be lots. And it won't just be for builders. It will also be for users. They're just focusing. They basically have 3 phases. First phase is focusing on the builders with a buildathon in June. Second is in July is going to be focused on onboarding. And third in August is going to be focused on grow. We'll see what the July and August have in store for us. And we'll definitely keep you guys in the loop.
You know what's amazing about Coinbase? So the reason Coinbase launched Base and is doing this whole on-chain summer thing and just on-chain in general is not necessarily because they thought that launching L2 was going to be like the most profitable thing. Like they did not expect to be making tens of millions like they're making right now. It was because they know that people going on-chain is the key for Coinbase to succeeding. They need the adoption of crypto to be even faster than it is. And what they realize is that most teams absolutely suck at building good user experiences. And what Coinbase is really good at is building a damn good user experience. If you use Coinbase app, it's incredible, right? Any product that they put out, they have the UX people there. But there was a lot of problems in the on-chain world. And so it's holding back the ability to bring in new developers, to bring in new applications, to bring in new users. And so what Coinbase said is, hey, let's go build on chain. Let's launch our own chain. Let's figure out all the issues in building on chain and fix them. And we'll do it open source so that everyone else can go and just use what we do and upgrade their own stuff. And then let's figure out all the pain points for developers, figure out all the pain points for users, and let's go fix them. We have the best team in crypto to do it. Why don't we just go do it? And they think whether Base works out or it just helps all the other L2s and all the other chains figure this stuff out so that it just ends up being that we can get adoption in crypto. They want to be the solution for that. It turns out it happened to also be a really good business opportunity for them. But they are literally just doing this so that they can speed up adoption. And it is freaking working. And you can see with this on-chain summer, what they're trying to do here is, hey, they did on-chain summer last time, which was the same thing. Let's launch a bunch of things. Let's onboard a bunch of people and let's figure out all the issues. They're doing it again. It's the same stages because they're literally going to do this and study. Where are people's pain points this time around? They've made a bunch of changes over the last year, a bunch of fixes, a bunch of optimizations. Now they're going to they'll do the same stuff. Users will go do it. Developers will go do it. And they'll go, okay, where can we improve? And then next summer, they're going to launch the exact same thing. Jesse already said, we're going to do on-chain summer until we have 1 billion users on chain. So he's like, we will do it every year for the next 10 years. If we have to, we don't care, because this is what just allows them to figure out and work through the kinks, which is like most of the other teams can't really do this because they're focused on other things. And so Coinbase gets to, and I absolutely love that. It's amazing what Coinbase is doing for this space. And actually, OKX is about to launch theirs or just did launch theirs. And then you also have Kraken. And hopefully they're going to be doing the same thing, because now you have 3 big exchanges that can be pushing the limits here on chain. And it's going to really, really speed up the adoption.
Let's hope that they also embrace similar language and branding, because if I'm going to just see Kraken having blockchain something or
whatever,
crypto something, or, they're not going to use the on-chain word because Coinbase is using it. Let's just keep the language the same for everybody. We don't need to confuse all the normies out there. All right, let's go to the next section of the show, in case you missed it, where we keep you up to date on what happened in a fun way. This is the milkman's favorite section of the show every week. So in case you missed it, first up, Tom Brady got absolutely roasted on Netflix. Netflix did a special where they got a whole bunch of celebrities together in one room to do, they called it the greatest roast of all time, the GROAT, because Tom Brady is often known as the GOAT in football. And Kai, you can tell me what you think about, I know you watched it or watched part of it on Netflix. Look, shout out to Netflix for putting a bunch of celebrities in one room, because this culturally got so much virality this week. Everybody was talking about this roast from both sides. People saying, the Washington Post said it was awful and a total waste of your time, and ESPN said it was amazing, and a whole bunch of great people in the same room making jokes. Unfortunately, the best joke of the night was about crypto. Nikki Glasser got up on stage and basically said that Tom Brady lost $30 million on crypto. What an idiot. Even Gronk knew, Gronk being Rob Gronkowski, me know that, not money.
Yeah, look, first of all, it's hilarious. And it's so funny. The Washington Post says it's a waste of your time. Like, since when is laughing a waste of your time? Right. But this is the old boomer mentality. These are the people that don't want crypto to succeed, right? The old people from the US that are just like, oh, you can't have fun. You can't do this. They don't get the crypto mindset, which is, hey, let's freaking change the world, but let's have fun doing it. And let's be weird and have meme coins and do all this dumb shit. Washington Post and those kind of boomers, they just don't get it. But I thought it was hilarious.
All right. Next up, in case you missed it, Bitcoin surpassed 1 billion transactions processed this week. 800 weeks after Bitcoin launched, they have done 1 billion transactions, an incredible thing that everybody in the space should be celebrating. High fives all around. Drink some milk and celebrate 1 billion transactions for Bitcoin.
Congrats to Bitcoin, I guess. But this is the first time I'm seeing this. I was just on vacation the last couple of days as well. But Jay, 1 billion transactions since it launched, like what, 12, 15 years ago, whatever it is. Guys, I don't know if anyone realizes this, if the Bitcoin maxis know this, but like Solana does over 2 billion transactions every single month. So like it took them 15 years. If that's not enough to go, oh, maybe there's something here with Solana and other things outside of just Bitcoin, then like, I don't know how obvious it is, but that's wild. I did not know it was only that much.
All right. Well, I'm sure you missed this then too, Kai. This week, Ohio State, go Buckeyes, had their commencement, their graduation for all their graduates this year. And the commencement speaker was some previous grad who owned some like online jewelry retailer. And he got up and shilled Bitcoin. And I don't know if you can see on screen here, I've got a video and he actually had a PowerPoint presentation. This is taking place in the Ohio State Buckeyes, like football stadium, like massive stadium, probably 90,000, 100,000 people fit in there. And on the screen, he's got Bitcoin logos and he got booed for shilling
Come on.
Bitcoin. He started talking about Bitcoin. He
Wow.
got booed, and it gets even better. The guy who wrote this speech says that he took ayahuasca to write the speech.
Wow.
And then during the speech, he made everyone do box breathing. He told the grads to sing instead of taking antidepressants, and told them that singing is how Latvia and Lithuania and Estonia earned their independence. And the best part is he shared the draft of this speech with Ohio State.
Come on. That's wild. Jay, do you think he's getting booed for shilling Bitcoin because people don't like crypto, or because he shilled a blockchain that has only done 1 billion transactions in 15 years when Solana does him on?
People started chanting Solana.
Yeah. I'm not a Solana maxi, by the way. I don't know what's going on in this episode, but
all right, let's go to the final segment of the show, Agree, Disagree, where we pull up tweets from the past week. As always, if you want your tweet or a tweet that you see featured on the show, make sure you tag us on Twitter and we will check it out and add it into the show. First up, Jack Nywald says, retail still isn't back, never was. Everything so far has just been BTC plus crypto natives moving money around.
Yeah, I agree completely. Someone in our Discord actually this morning had asked about retail and was like, are they late this cycle? Like, why aren't they here yet? And I was like, they're not late this cycle. That's what retail is. Retail is just late. That's what makes them retail. If they were already here, they would be crypto natives or institutions, right? But they are retail, which by definition means they are late. And so retail doesn't come until late in the cycle. We're still pretty early. I think we're like mid-cycle, as I said in the Market Watch, where we're in that transition period. I think retail comes when we're at 100K Bitcoin. And so in this transition period, we're moving from that like first part of the bull phase. Now it's kind of, we wait for a bit. And then I think it's like we get into the aggressive part, the 2021 stuff. That's when retail's here. When things get crazy, that's when retail is here, because they are crazy and they're not here yet. So I completely agree.
I think the 100K is the nice round number. Completely agree with that.
That brings them back.
Yeah, definitely. You're going to see it all over mainstream media when we hit 100K. Okay, next up, Legendary says, the NFT craze of 2021 is back, but it's on blast. Top Shot is back, but it's Fantasy Top on blast. New cycle, new heroes. Don't go into today's bull with last cycle bags. Trends and patterns are the same. True innovation is rare. Just the city where we do business is changing.
Very interesting take. So Carly and I talked about this last week too, of Blur launching on Blast last week as well. And there's a lot of incentives to trade on there. And I was like, well, will this bring a little bit of the bull market back? Not sure. And again, we were like, well, maybe not a bunch of the same NFTs as before, but interesting. I mean, Fantasy Top has been quite active over the last couple of weeks.
35 million in trading in their first week, Fantasy Top.
Right. So interesting. I don't know that I agree fully. Like the 2021 craze is back, because like I don't think we're going to get those kind of valuations. Not yet. Anyway, we need retail back, as we just said from the last one. But I agree. Like it's new cycle, new heroes. It's going to be different alternatives, different space, and Blast is probably where it all happens, without a doubt, in my mind. So we'll see.
I agree with this tweet fully, and especially the last line, that trends and patterns are always the same in cycles. The challenge is that in crypto, we move ecosystems and we move chains. And this is why trading is so hard to do in crypto, and why, unless you're going to follow everything very closely and move your money constantly, you need to take the simple strategy of dollar cost average into the majors and not try to follow every narrative.
Well, and also like the people in the space right now are pros. Retail, as we just said, is not here. So this isn't a 2021 craze. It's just a crazy tough competition between like the pros that were here in the NFT craze before that, and the ICO craze before that are in memes. Like these are people that do this all day, every day. I think I talked about this with, maybe it was the Zeneca podcast. It is not like in 2021, it was easy to make money because you could front run all the retail that was just buying dumb stuff. It's pretty easy to figure out. That craze isn't here because retail's not here. So like if you go in the battle royale right now, you're going against pros. I agree, but I don't fully agree with this take.
Okay, next up, Jason Choi says, whichever chain captures the first big social app will win the whole category. Social is inherently more Lindy than DeFi. Average users of social products are more sensitive to onboarding friction than crypto degens, meaning most won't be multi-chain. Decent confidence on this.
I agree with this completely. I mean, social is what we do. If you think of every app that is the most apps we use, it's all about social communication in some way, whether that's like TikTok and Instagram or even like podcasts, newsletters. Like it's all communicating with other humans essentially. And so I think whichever chain can figure that out is definitely gonna be it. And if you think of who's the farthest along, it's probably Base, right?
Mhm.
They've got Friendtech, which I mean, I don't think that's the big one, but like it's something playing in the world there. And then they have Farcaster. They have dominated Farcaster. Farcaster's obviously across other chains, but they have like 90% market share right now in Farcaster, and then all the tokens and stuff that come with it. Now, again, don't know if either of those two will be the ones, but like Base is definitely the one that's kind of like really working towards these consumer apps. And then I guess so is Blast. It's the L2s right now. Solana doesn't really have a lot of social stuff at the moment, but yeah, you definitely want to see where people like hanging out and doing social stuff, because that's where it's all going to be.
Next up, Martin says, memes have value. The only reason we think that they don't is because there hasn't been a good way to financialize culture, internet culture. Post something online, goes viral, millions use it, reference it, get intangible benefits, but the current web doesn't allow for value accrual.
Yeah, I mean, crypto is just a layer for financialization. And as a result of that, every time we get a new sort of like technology for that, we can basically wrap different things and tokenize different things, or like we can financialize different things, right? The internet allowed us to financialize different things. And now crypto is allowing us to financialize different things, including internet culture, which most people, they're like, what? Like, I don't get that. And it's so hard for people to wrap their heads around, like meme coins, but that's all it is. We are financializing culture. And that's what NFTs was in 2021 too. So yeah, I agree.
And the culture of the next year, especially in the US, is going to revolve a lot around politics, which is why political coins have become such a big thing. You think political coin is the term that's going to fly?
Political coin? I have no idea. I haven't thought about that. That's a good question.
Get you back next week on that one. Okay, next up, QW says, the old playbook of building/funding vaporware, playing the hype game, and then getting listed on Binance doesn't work anymore. There's an oversupply of projects and tokens, and exchanges can't possibly list all of them. Simple math. Fundamentals, unironically, matter more than ever.
I agree. I mean, I still don't think fundamentals are a huge aspect of price action, but they matter more and more every day for sure. And so it's important to understand them without a doubt. The thing about the exchanges though, the thing I do agree about this is that exchanges actually control this market a lot more than most people think, because they choose, what you can trade on Coinbase, on Binance, etc. And they are very strict, and they have just recently gotten extremely, extremely strict. You need to basically have a really strong case of why they should take your token. You either have to pay them millions of dollars, or you have to prove that you are going to have millions in dollars of volume in that token, because that's where the exchanges make their money. And so if you don't have a massive community or like a massive amount of people already buying and selling your token, then there's no way they're going to list your token anymore. And so they are now the like gatekeepers for crypto tokens until we all move on chain. Coinbase succeeds at that. Like these exchanges play a big, big role in this ecosystem that most people don't actually realize. It's not easy to get your tokens on there anymore. And so now either you can't play the hype game, you just actually have to have a legit project, or people find a new way to create hype that gets a lot of volume on their token, and then they can get on these exchanges. Like, I mean, a lot of like what the point systems and stuff are doing right now, what Blast has been done really good at. So like people do find ways around this. So like fundamentals matter, but also people find new ways to create hype and basically inflate their expectations of their token.
Okay, last one. Duo9.
This guy again. Why do we keep getting this guy on the agree?
For that reaction. This is why I put him up, for that his exact reaction. Thank you. Okay, that's it. That's a wrap. Thanks for listening. No, I'll give you this one. Okay, so Duo9, Kyle's favorite Bitcoin maxi, he says, in a bull market, this is actually bearish for Ethereum. And he's a screenshot of the average GWEI, GWEI, which is the cost GWEI. Thank you. The cost of transactions. And he's showing that basically the GWEI is very low on Ethereum right now.
All right, I agree with this take. For GWEI in a bull market is crazy, crazy low. I mean, look, partly it means that the Ethereum scaling solution is working because people are using L2s. Because interestingly, it's like it's a bull market, which means on-chain activity is very, very, very high in the Ethereum ecosystem. And somehow Ethereum's able to do that for GWEI. That is really good. And so like part of it, I disagree, because you actually just need to change your perspective. Things are moving, right? Activity is now elsewhere. It's not on here anymore. But also the whole purpose of this scaling solution is that we're still going to have some decent gas on Ethereum. And this is pretty dang low for a bull market. So I don't know. I kind of agree though. That's kind of funny.
Dude, look at that. Never thought I'd see the day.
I got to say one thing. I imagine, I haven't looked at the Gwei in a while because obviously I was off, but like this must be like a 1 second.
I was going to say, you could.
The Gwei is not this low almost ever. So like,
Yeah.
I don't know where he's cherry picking this, but
I was going to say, you could easily cherry pick this stat. So dangerous. That's a wrap. Thanks for listening in, everybody. That's the roll up for the week. Everybody that is watching out for the Eigenlayer TGE event happening today, if you're listening to this on Friday, I hope you get some good money out of that. Kai, I hope you're looking forward to that, I'm sure. And have a wonderful weekend. Touch some grass. I hope to see you guys in our Discord if you're not already there. And of course, if you're not subscribed to the Milk Road newsletter, make sure you subscribe. Link is in the show notes. We'll see you on Twitter. We'll see you around. Peace out. Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes only, and nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.